Welcome. Thank you for attending today's event. My name is Mandy Purcell, and this is the 4th annual Commercial Executive Magazine's Broker of the Year goes to. Can you read that? It's calligraphy.
I think I can.
Okay.
This is this prize to me. Barry Gable, CBRE.
We got a bribe. Just kidding. Want to say something?
Yeah, thank you very much. I appreciate it. Being voted on by your peers is a super honor, and I appreciate it. Love the business, love the clients, and certainly love the people I work with. Want to thank Chris and Amy and Jamie on my team for their loyal support. And I also want to say something about Mandy. She puts on a tremendous forum every year. I'm not sure of anybody else that can really pack a house like this with such great, talented panelists, and I always love to hear from our friend, our moderator. So it's a great event, and I'm proud to accept this. Thank you.
Congratulations.
Yeah, I was going to put that in.
Okay, are we all ready? I'd like to introduce our talented moderator and land guru, Nate Nathan.
Thank you. Okay, so we're going to start out. We're going to get everyone on the same kind of level. For those of you who have not been here before, I was on the first panel in 2010, and everyone was ready to commit suicide. Okay? It was awful. And the next year, we called the bottom of the market in 2010, and I'll talk about that in a minute. Most people didn't believe us. And the next year, Mandy asked me to do this. And I said, okay, Mandy, I'm going to do this. But if we do this, we need to, the market's back. The people in here have lived through 5 years of hell. And we've got to help people learn from the people that have maneuvered us through this market, through the city for the past several years, with the likes of these people that you see up here, Ed Robeson, Drew Brown, the Bidwell family. I mean, if you just look at the pictures that are up there, if you can see them, it's some of the finest people in the city. And, you know, one of the things I said a long time ago is one of the biggest problems we have is who's our leaders. It used to be when I started in real estate, you had Burton Barr, Barry Goldwater, everyone said in town, what do we do? When you say, Burton, Barry, what do we do? They go, do that. They go, okay, that's what we're going to do. Okay, nobody wants to do that anymore. And these guys, thank you so much, panel, for being here, are part of that same group, and I'm really, really honored to have them up here, okay? So let's go into my part of this, and then I'm going to introduce each one of these guys. The purpose of this is not just to hear what's going on in the world, how they survived, where they're going, what they're dealing with in recovery, what they dealt with in the past, but again, it's getting to know them as an individual. It wasn't easy. My dear new friend Scott is a very difficult man to get information from because he's been so busy, and I'm fascinated with this man. I want to get to know him, but we'll get to him in a little bit. He told me to be nice to him, which I will be. So that's our Christmas card that you see up there, Recovery 2010, Watch Us Operate. Nobody believed we were going to do that. We were in the recovering market. And so basically what I'd like to do is go to the next slide and walk you through my entire real estate career. But before we do that, I really want audience participation. I really, really want you to do this because this is a lot younger crowd than I'm used to in the past. I want everybody to raise their hand who's under 40. Okay, well, congratulations. Because if you survived the last few years in business, you are going to kick some serious booty over the next 3 to 5 years, okay? And I've lived through 5 downturns. I'm a street fighter. I rely a lot on Elliott Pollack. Elliott and I have traveled and done speeches and market overviews. I'm going to show you my entire real estate career. We're going to start with all the downturns, okay? That's the blue. All of those are the downturns. That's me and Elliott when we started. I started Tom Fannin, 1976, okay? We were coming out in 1975. That's the population growth. That's the permits. Guys, guess what? It's 1994. So for all of you under 40, because the rest of us know what that means, it's 1994. What does that mean? 1990. I was at the Biltmore for 1,000 people. deal that the president of Continental Homes was giving a speech to. So 1990 is the same as 2010. I go to the speech, the president goes, okay, that's it, take off. There's no job growth, there's no population growth, it's gonna stink for the next 5 years. I just met my wife-to-be, I'm like, oh, great. So I walk out, my phone rings, a guy from Pulte Homes calls me up and says, I wanna buy every lot I can get my hands on. I'm like, okay. UDC calls up, every lot, DMB, Sunbelt, Stardust, Francis. I was making a fortune. 1994, look at 1994. Population, something's wrong with this mic, but all of a sudden, everyone goes, oh my God, the market's recovered. I need to buy lots of land. And I'm like, okay, well, we got to go to UDC, Pulte, DMB, Francis, Sunbelt, Stardust. And for those of you who dealt with them, they're my dear friends, I represent them, it was brutal. They're like, I can't make that work. I need to buy land. So guess what? Follow the rest of this. That's the updated population growth. Those are the permits by Jim Belfiore. Those are the permits by Errol Brown. There you are, just like 1994, okay? And that's Elliott and I in 2020. So you're sitting in this period of time right now with declining lot supply, declining foreclosure, population growth that's one of the best in the country, 115,000, Elliott can attest to that later, job growth, 53,000 jobs in the last 12 months from April to April, or July to July, a resale market that y'all have heard about too much, declining foreclosures. Here's what I'll tell you, that there is not enough deals. I've been going back to New York, I've been going back to the Pacific Coast Builder Conference since 2008. We've been getting the crap kicked out of us as a city. 2010, I'm at this big deal, PCBC, this lady blows a $100 million land deal, walks up to the buyer and says, you're going long, and it's the biggest analyst in New York. You're going long on land in Arizona? You're an idiot. This is a huge company. He comes back, he goes, we're dropping the deal. Okay. I'm like, what? Next year, Pacific Coast Builder Conference, same lady stands up in front of 1,000 home builders and developers and goes, okay, that was a mess. Phoenix is the hottest place in the United States. You gotta go there, you gotta put all your money there, it's gonna be crazy. And guess what? It's crazy. So you guys, the tide's coming in, the boats are floating, and you better start turning your motor on. It's really gonna be a good ride. Okay, so that's my puff pappy speech right there. So what we're gonna do is we're gonna now get to know your I'm gonna switch to this one because it's driving me crazy. You're gonna get to know your panelists today, okay? So we're gonna start with our first one. I'm gonna kind of show you some of their pictures. That's Chapin Bell, has a family company, PB Bell. Great company, I've done a ton of business with them. They build great product. And basically, the next one shows you what Chapin's favorite restaurant is, get to know them a little bit. And so Chapin, would you just tell me a little bit, how long your company's been going, how you got started, et cetera?
Sure. My father started the company about 40 years ago. He's sitting right over here. So we've been, since the early 70s, we've been focused primarily just on multifamily development and acquisition property management. So we manage about 6,000 units. We've developed about 4,000 units over the years. And as far as how I got started in the business, my first job as a kid, I was growing up, I was a maintenance guy when I was 14 years old at one of the properties that we owned. And that didn't last very long because I wasn't very good at what I was doing. And after college, I went to school. I went to Cleveland, Ohio, where I was a commercial lending officer. And in the early 90s, when the market started getting better, I sent my dad a resume and asked if I could interview for a position there. And I came and I interviewed, and I got the job. That was about 20 years ago. So here I am today.
That's great. Well, we'll get back to your industry in a little bit here. Okay, the next picture is Charley Freericks. He's a handsome little bugger from Alaska. Look at the next one. Look at a handsome. What, does it look like Leave It to Beaver? And he doesn't like football, I guess. He likes hockey. So, Charley, will you kind of introduce yourself, give him a little background and how you got going and landed at DMB?
Happy to do that for you, Nate.
Thank you, Charley.
Born and raised in Alaska, as it says up there, and I went to spring break at Arizona State one year, And I've been at University of Oregon in the rain, and I went back and packed my gear, withdrew from University of Oregon. I went back home for the summer, came down here. I got here in 1979, and I never really left. This will be a fun story for me right now. So in the fall of 1982, I had a professor introduce me to a broker and said, this guy hires people every once in a while, and I kept trying to get a job. Starting in August, went to March, and I called about once a week, sometimes every 2 weeks, sometimes twice a week. And I called one day in March of 1983, and I said, I'm trying not to be a pest, but I'd sure like a job. And it was Bill Gosnell at Grubb & Ellis. And Bill says, he goes, I got some good news. I closed a deal. I'm rich, and you're hired. So the rest of the story is he said, get dressed up and come down here. We're going to see the person you now work for most of the time. And we went to Jack Razor's office. Jack was the guy that bought the real estate. And Bill said, your job is to do anything Jack wants. So that's how I started my career. So I spent 7 years at Grubb & Ellis doing a lot of land deals, did a lot of deals with Jack, and learned a lot about the business from Jack and the crew. Went to work for Talley Industries in 1990. They were really an unregulated lender and had survived through the down cycle just in time to have the regulators and an accounting company look at their inventory and shut them down and tell them they needed to write their stuff down to market. So I spent 7 years at Talley, and I tried to sell Talley's assets to DMB, and Drew said, that's really a bad collection of assets. He said, but when you're done here, call me and we'll give you a job. So I took a few months off, and I called Drew and said, let the begging begin. I'm unemployed, and call me when there's something. And I got a few months out of it, but he called me to compete for the Caterpillar Tractor Company Proving Grounds, which is now Verado. So been at it about 30 years. I've been at DMB 15, and it's all good.
Great. Thank you, Charlie. It's awesome. Okay, the next one we have up here is Elliott Pollack. Most everyone knows him, so he's probably a short study, but it'd be interesting. He did send me a picture of him and somebody, but he cut the somebody off, so I couldn't superimpose somebody onto him. But you'll see something later that I did. So anyway, not you. So why don't you go ahead and kind of introduce how you got here.
I grew up in New York, and I planned on being a tax lawyer in New York City because my father gave me three choices. I could have been a doctor, lawyer, or accountant. That was it. And I was in Columbia Law School, and well, first of all, my mother was on a TV program in 1963 called Concentration, Hugh Downs, Master Reeves Puzzle. And she was the all-time winner. She was on it for 3 weeks straight, won $100,000 worth of crap in 1963 dollars, which was a fortune back then. And the only trip she won was to the Arizona Manor. So my parents came out here when I was in college and for a week and ended up spending the whole winter. And then I get a call when I'm a sophomore in college saying, guess what, we're going to sell the house and business and move to Phoenix, Arizona. And I said, where the hell's Phoenix, Arizona? What are you kidding? So I started law school in New York at Columbia, and I called my draft board because this time it's fall of 1967. And I said, call me in 3 years when the war's over. They said, nothing doing. We will give you 1 year and then you're ours. So I dropped out of law school, ended up in graduate business school at the University of Southern California. And after a year at USC, there was no enough credit so I could get the degree I wanted in 1 year. After a year in California, there was no way in the world I was going back east. No way whatsoever. By that time, my parents had moved here. So I came here, and I ended up working for Valley National Bank. And the other thing, the other reason I came here is because I got into the 6251st U.S. Army Hospital on Oak Street, and I made the world safe for democracy in Fort Sam Houston, Texas, basically.
Thank you.
Don't mention it. And so I had a great time at Valley National Bank. I worked there for 18 years. Because of who I reported to, I didn't have to deal with any of the bullshit politics. I was the first economist they ever had, so an economist did whatever I told them an economist did. And it worked out great. And after 18 years, I'd been at one place too long, and I went out on my own. And in interim, one of the things I did at Valley National Bank is started buying land. I started buying land because I believed, based on my background, if this is where the city was and there's a piece of land here. All I had to do is judge how long it was going to take the city to get from here to here to know what this land value would be. And so I started buying land in 1976, and I really haven't stopped since, and got reasonably good at it. And Nate sold most of it, interestingly enough. I don't know how that happened. And basically, I've had 2 jobs my whole life, the one at Valley Bank and my own company. Nobody would hire me when I left Valley Bank. I had to start my own company. It's been a great ride.
Great, thank you, Elliott. Glad you moved here. Jerry Moyes, he's really glad. He's a handsome man, isn't he? Jerry Moyes. Jerry is also a very tough son of a gun to get a hold of. He's so busy, but he's a very fascinating person. He's invested in a lot of the deals that I've brokered with Mike Ingram and others. He's a pillar of our community. Everyone looks to him, and we're really honored to have you here today, Jerry. Why don't you kind of give us a little background?
Well, I think, I'm not sure whether you want an old truck driver up here with all these distinguished real estate guys, but don't ever say no to Mandy. She just keeps after you and after and after you. So, but, I think most of you know my story. I born and raised in Ogden, Utah, a little town called Plain City, and the huge story up there, 4 of the largest trucking companies in the United States and the world come out of this little town of 850 people. And we tell the story that we had diesel fuel in the water and it was all conceived in sleepers of the truck. So that's kind of where we got, when people say, when did you get started in the trucking business, that's what I tell them. So, but I come down here in '66, and as Elliott said, just really a lot happened to the city, obviously, since '66. What do you say, '67? When did you get down here? Yeah.
Well, 67.
But anyway, we started with one beat-up old truck come down here, and little bios in the magazine. You probably heard the story. And by 1990, and obviously we'd been involved in a lot of real estate deals in and out of that time, and obviously went through some challenges in the RTC days, and some of it was good and some of it was bad. Actually, the piece of property we on 75th and Buckeye down to Lower Buckeye, we ended up with through the RTC. Somebody called us one day, I can't remember who it was, and says, hey, I want to buy 3, there's a big lot or a big package going on, and there's 3 big buildings downtown I want to buy, and there's 160 acres of farmland out on 75th and Buckeye, and we don't want it. So we ended up buying that, and that's kind of where we are out there today. So, but, most of my background's in trucking. We run the largest trucking company in probably the world, and we just merged another company I had into Swift, so we're up about over $4 billion in revenues today, and doing very well. The stock's moving good, and Swift does a lot of. We've got a lot of real estate around the country and Mexico. We run 700-800 trucks down in Mexico, and got real estate down there, and so we probably have $400 or $500 million of real estate around the country. And as Nate said, I've been involved with Mike Ingram. I'm one of Mike's kind of go-to guys, or used to when I had some money anyway. And we've rode Mike's horse pretty hard. Done extremely well in some deals, and we got 1 or 2 that we kind of got to wait out a little while. But so anyway, just a lot of fun. Had a great life, and love Phoenix. So.
Thank you, Jerry. Okay, next I think we have Mel Shultz. Mel's a dear friend of mine, and just a fascinating human being relative to all the different things he has his fingers into. It's crazy. That's Mel down there in his little basketball outfit and baseball. First I got this whole set of serious, professionally taken pictures. I called his secretary. I go, Jet, this is not working for me. We got to go back. So it was hard squeaking these out of him, but thanks, Mel, for cooperating. So why don't you give us your story?
Sure.
You only get 5 minutes.
Okay, 3-minute time
No, I'm
limit.
just kidding.
So I'll just critique your pictures. There's no C in Schultz. I've been saying that since I was 3. But outside of...
Hey, I'm dyslexic. I can misspell anything I want.
But who am I to be? Who
It's
am I
all
to
about
be
the
critical?
picture, Mel.
Yeah, I don't want to be critical. I appreciate the pictures of my 8th grade basketball team, varsity basketball, and my all-star baseball team when I was 12. So those are probably the highlights so far. I am proud that my parents knew to come to Phoenix when I was 2 from Cleveland, and so I've been a transplanted native, so to speak, as my brothers are and were. So I am very blessed to have David Eaton and Jerry Colangelo as my business partners. And when I was in my late 20s, there was a company called Eaton International, and the CEO, David Eaton, wanted to joint venture something with me that I owned called Hayden Plaza on Scottsdale Road in Curry. And so I met David, and that was 1980, and I was still in my 20s. And he said, maybe we can do something else together. And within a couple years, over 30 years ago today, JDM was formed. And David had a friend named Jerry Colangelo, who was the general manager of the Phoenix Suns. And he said, I'd like to invite this guy in. He's a good guy, basketball guy. I said, yeah, I know my brother, Marty, worked for him. And so in 1983, we formed JDM. And we were able to do a lot of things in the Valley. JDM Sports was the general partner of the Phoenix Suns. And then we were fortunate enough to be able to get a franchise for baseball. And so that little kid that you saw that played on the All-Star team as the pitcher has a World Series ring. Yay. And, well, what I figured out very quickly is I was never going to get one by my talent on the field. So somewhere along the line, I learned how to understand capital markets, and raising money. And so having the mentorship of David Eaton and Jerry Colangelo for 30-plus years, gosh, I guess anybody could be up here and be the M or whatever of JDM. So that's my story. So.
Thank you very much. I appreciate it. That's great. Okay, the next is the most important person in the state of Arizona. She probably has the toughest job of anybody in this room. The pressure that's coming down this woman's path is huge. So here's Vanessa. The next picture is her in high school sitting on my lap. I'm trying to kiss up to her because she owns all the land.
That's right. You're doing a good job. Yeah.
She actually sent this picture and like took some tan thing and filled the face in. I went, oh no, that's not working for me. So I called up and asked permission if I could do that. Scott, I wasn't as nice to you on that. I'm just kidding. So anyways, Vanessa, why don't you kind of give us your little story, how you wound up where you are.
Sure. Well, I think it's good news for everybody that my bio is a little bit more abbreviated than everybody at this table. So I think I can keep it, a little bit shorter. And I will point out too that Gigi's is my favorite restaurant, and it's actually the cafeteria at the Department of Revenue. So that was just a little inside joke into my world at the State Land Department. That's the world that we operate in. But I will say that I thank you for the kind words, Nate. But we definitely have a difficult job at the department, but we have a lot of opportunities too. My path to Arizona was kind of the same path that Charley took. I grew up in Montana, and my sister went to ASU. So I came down to visit and knew that I needed to get out of the snow and into the warm weather. ASU was a great place. I went there for undergrad, ended up with a major in humanities, knowing that I was going to have to go on to grad school. There's not much you can do with that sort of major. I went on to law school, set to go to Boston College and end up on the East Coast, but being a West Coast person, I made the decision to stay and go to ASU. I came out in 2003, and the real estate market was starting to take off, and I knew that's where the opportunity was. So started out with real estate litigation. Our firm probably represented some of the people here in this room. And every time I picked up the phone, somebody was angry. So I knew that was not my calling. Figured out that even when you won, it wasn't a victory. Someone ended up owing their attorney's fees, and it was not a pretty place. So I decided I was more of a mediator than a litigator, and went into a land use planning and zoning firm with Jason Morris and Mike Withey. Probably the best 4 years that I've had. That was a great time. Again, it was a great market, and making a lot of people a lot of money, so it was a great time. Decided to take a chance and go into government in 2009. Went to work for Governor Brewer as her Deputy General Counsel, and that was actually a very challenging time. $3 billion deficit in the state, a lot of very hard issues to work through, cuts to every state agency, to very necessary services. And Maria Beyer at that time was appointed as State Land Commissioner, and I had known Maria for a long time. And she asked if I wanted to come over to the State Land Department and get back into real estate, which was always my passion. And I jumped on the opportunity and was the Deputy State Land Commissioner for 3 years. Maria left, and the governor appointed me in November of last year. So great time to be at the department, and we have got a lot of good news to share later on in the presentation.
Great,
so.
Thank you very much.
Thanks.
Okay, Scott Peters. I think I've met a gentleman that works harder than I do, whose employees are more loyal than my employees, because you couldn't get squat out of him. And as I got to internet him and research him and figure out he's a self-made man, he works his tail off, I figured, you know what, I feel like I was raised with this guy. So the first picture is actually when we were little kids together. I just feel so close to you, Scott. Then I find out he's a total Ohio State-like nutcase, right? So then I go on the internet and I find these pictures. This is him reading a magazine called Buck Nuts. Is there really a magazine called Buck Nuts?
It really is.
Is there? Well, we'll talk more about
Ohio.
that one later. Yeah, and then what you didn't know is he was a Heisman Trophy winner one year. You could see him in his number 10 outfit right there. So with that, I'll let Scott, because I'm really anxious to hear it myself, talk about, and thank you for headquartering in Phoenix, and I'm fascinated to hear your story.
Well, thank you. And my story is pretty much consistent with some others that you've heard. I've been very fortunate. I had a chance. I went to Kent State University. I'm from Ohio. I think everybody, most folks are either from the Midwest that have come out here, and once they come out, they stay. I first came out in the middle 80s, and I was working at Arthur Anderson in Cleveland after graduating, and it was so cold in Akron where I lived that I said, this just doesn't work anymore. And came out here and worked for an accounting firm for a while, which was Toback and Company way back when in the mid-'80s. And Arizona went through a very tough time in '87, '88, and '89. And then I got a great opportunity to go work for a gentleman named David Murdoch. And David Murdoch at the time was in the top 50 richest men in the world. And actually, David started in Phoenix where he made his first $1 billion, and had actually known Hal Toback, who had done a lot of work for Mr. Murdoch. And I still call him Mr. Murdoch even after working for him for 8 years. But I had a chance to go and work for him, work for Dole Food Company for 4 years. And then I had a chance to run his private real estate, which was, at the time, about $5 billion worth of real estate that was private that he had. And that's quite a bit today. A little less today because he sold a lot of it. But a great opportunity to learn real estate, take an opportunity to learn how to, what the most important thing was to make money, and to figure out that it's other people's money that you use sometimes, and you need to really take it seriously and primarily give it back to them. And that's something that he took very seriously. Worked for him for 8 years, and then I decided that I had an opportunity to go take a company public. So that was my first attempt to take a company public. Me and another gentleman co-founded a company in 1997 and raised all of $160 million. And at the time, that seemed like a lot of money. And we were public for about 8 years and sold the company. And I'd really loved Phoenix and thought I would retire after 8 years in the public marketplace. And moved back here, and that lasted about 2 weeks. And I realized that watching and worrying about the cracks in my house was probably not the thing that was going to keep me motivated. So I had an opportunity to go back to work and take over a company called Triple Net Properties, which was in California. Many of you know Cole, and it was a competitor to Cole. At the time, we had about $5 billion under management, and we're raising about $1 billion a year of equity. And we did what's called alternative investments, non-traded REITs, 1031, and funds, a lot of investment funds. Well, those original shareholders hired me to take it public, and And so we took it public in 2006. And as part of that, we then bought Grubb & Ellis, the Grubb & Ellis from, which is now, I think, Knight, Newmark, Frank, or whatever. And I had a chance to run that for a while. And that was an experience. I first got my experience on brokerage during that time. But at that time, I decided that I wanted to start a company from scratch and started in a sector that I thought had tremendous opportunity in it, and that was in healthcare, and to buy medical office buildings. So in 2006, I founded Healthcare Trust of America, no shares, no shareholders, no equity, no buildings. Went on, and we were very fortunate to raise over $2.5 billion. We've been very fortunate to get public here in 2011. These folks over here sitting at this table are really the success stories that really make our company run. But we've been very, very fortunate. We've returned to shareholders over the last 8 years over 9%, which during those difficult times was, I can say, was difficult. We're in 27 states. We're about $4 billion today, and we're the 4th largest healthcare company in the United States. So it's just, sometimes if you're in the right spot, you continue to do things that you think are right. Just very fortunate to be able to buy real estate with cash during 2008, 2009 when no one had it. Wasn't the most popular thing to do. Fortunate to do things in the non-traded REIT space. We were a non-traded REIT, which I started, that no one really thought was going to work. Then I moved the company here and hired my first employee, Kelly Pruitt, in 2009. And I told her when I hired it, we'd only have 7 people. We had a lot of cash, we owned a lot of property, we'd use third parties, and we'd only have 7 or 8 or 9 people, and that's how we do this. Well, we now have over 150 people. We have 4 regional offices, and we've kind of grown a lot. And again, I'm very excited about it, and I think the best thing about what I get to do every day is, one, I love what I do, which is really great. And the second thing is to work with some really great people. I think that's, if you work with folks that are excited about you, about what you do as you are, then it's fun to come to work. So as I think everyone up here is, I think we're all very fortunate to do something we like to do.
That's great. Thanks, Scott. Okay, so you got 7 people. Not one of them is a native. And I bet you if everyone raised their hands in here, probably 20% of you are natives and 80% aren't. And so we've all just lived through a terrible time, 5, 6 years, depending on what profession you're in. And so kind of playing off what Scott just said, and I think Elliott and I think Mel, maybe Chapin, capitalized in 2010 and woke up and said, wait a second, you want to buy when everyone's selling and you want to sell what everyone's buying. So Elliott, in 2010, what were you doing?
Well, in 2008 and 2009, year-end especially, we were buying all the lots that we're now selling back to the same home builders.
And how about land deals? Were you into land then, or were you just, I can't remember if we were
Oh, no, we were buying everything we get our hands on.
Okay.
And the interesting thing is when you're in the middle of this, no matter how good a deal seems, it doesn't pencil out. You can't make anything work at that point in the market. It's a leap of faith that the world's coming back. And, it was, in retrospect, easy during the time. My partner was Southwest Value Partners. And Schlossberg and I were standing on a piece of land in Buckeye that we were paying $10,000 an acre for that had sold for $80,000 an acre. And I'm saying, I know, Mark, what do you think? He said, I know, Elliott, what do you think? And we stood there for about 2 hours, and then we said, what the hell, we'll try it. But it was, yeah, it was tough.
Mel?
In 2009, in 2010, we were doing what we do every day and have for 30 years, and that is to patiently look for opportunities and sift through the numerous deals that were out there. And we found something that we liked, and we knew it would only be through a lender, so we were talking to lenders at that time. And so in 2009 is when we kind of restarted, and we bought debt from, sorry if you're here, Citibank, and acquired the Arizona Biltmore Golf Courses and the Wigwam Resort, and took it through a 363 bankruptcy, and took ownership, and then began remaking and rebranding the asset, and have continued to buy since. So we restarted at the beginning of '09, and we went to our favorite partner, who Donald Diamond introduced us to. Thank you, Donald. And they said that we were too early, and we said, wow, wouldn't this be a good time to be too early? And they said, well, you're 6 months too early. I said, this is the best I can do. I got it tied up now. I can't, Anyway, so we asked them a question. We said, well, you're a fund. How do you do it? Kind of tell us how you be a fund. And they walked us through, gave us some pointers, and we did our first fund. And so that's the answer. We bought.
And hey, Jerry, what was going on in the trucking business in '10? What were you doing to fight off whatever was coming, or were you capitalizing off?
Well, in '09, actually in '08, I took the company back private, and it was very, very difficult years in our industry. And if you read the bio, I jokingly say my interest expense was $1 million a day was the bad news, but the good news was only 5 days a week. So, but you gotta. But anyway, there was some very difficult times, and we was able to get the company turned around in a very difficult environment, and went public in December of 2010. And so we went private, public, private, back to public again today. And most of the real estate stuff I've done is just been stuff that we use, and the industrial stuff within our business. And,
Gotcha.
But 9 and 10 were pretty tough years. So.
Charlie, we kind of lived through that together. Me on the first floor, him on the third floor.
So in 2009, I took over and ran our commercial property group, which was great timing. And I'd never dealt with retail tenants before. And I remember, I don't know if Keith Ernest is out here, but I called Keith one day and said, can you tell me a little bit about these restaurant deals? He said, oh, you mean where they think the lease is a letter of intent? And we'd be negotiating in good faith to give these guys a break. And I'm looking at T.A. Shover over here, our leasing guy. And in the middle of the conversation, you think you'd be doing great. Somebody would call and say there was a moving van at the restaurant. and it was just mind-boggling. So 2009 was my worst year, except for 1989, where I was a broker and had zero income. So that put things in perspective. And so we had a bunch of debt, and we went through Market Street up at DC Ranch was a CMBS loan. We couldn't get a call back. And so we just did a lot of slugging it out in 2009. 2010, we didn't call it as boldly as Nate did, but we said, we think the worst is behind us, and we started sort of getting ready for recovery. And at night, I was praying it was true. Daytime, I told everybody it was good. And so we really, we were plowing forward. I see D. McDonald over here. We were getting ready to really push forward to see if we could bring Eastmark into reality. And we were just holding tight and hoping the recovery was coming soon.
Great. PB Bell was doing what?
Yeah, we were in 2009, 2010. I think I was getting my PhD in survival. I think on the same week in 2009, we received letters from banks for every property owned that said, we did an appraisal on your property, you're now in default. Yep. So and those were properties that were under construction that weren't even open, and properties that we were performing. So we spent 2 years approximately kind of fighting that battle and working through, really trying to survive, and how do we get through, refinancing and restructuring those deals. So when we got through that, it was what do we do now? And we felt very confident about the apartment market where it was, and we started finding land. We started staffing up in 2011 and finding land, and those are the kind of things now that are kind of paying rewards for us.
Right. Okay, Vanessa, the State Land Department, who's by Constitution required to sell their land at the highest price possible.
Yes.
So what the heck were you guys doing?
We were not selling any land. I think most of you in this room probably know that. Fiscal year 2010, which was the result of 2009, was our lowest year in probably the last 15 years, if not longer. You know, it was about $110 million that we generated for the trust, and you position that against what we made in 2007, which was between 500 and 600 million. So, you know, our rights of way sales to ADOT were helping us through. So, you know, rights of way as well as royalties from minerals, from copper, because the copper prices were pretty high. But in terms of real estate sales, it was extremely low. You know, we were just trying to deal with workouts with no flexibility because of the Constitution and the Enabling Act, and sitting there in rooms with people that had spent a lot of money on really great land and put in huge investments in terms of time and in some cases infrastructure, and just saying there's not much we can do unless you can, you know, muster up the courage to take a run at the Constitution. But so we did our best, and we enacted some, with the help of the legislature, we went over and worked on the ability to give people some additional time on their payments to allow them additional extensions. But we couldn't reduce the interest. We could not reduce the principal. It went to auction. So we got most of the land back, or at least a good proportion of it is what we were doing.
Right. Okay, so Scott, we're now in 2013. We're sitting in probably the second fastest growing state in the nation. And just for the record, as I went back to those trips to New York and listened to all these people kick us in the butt, did you know that for 40 years in a row until 2007, the state of Arizona was in the top 3 fastest growing states in the nation? And when you remind these people that the fastest growing state in the nation is North Dakota, okay? 4 years ago, we were 48th. 3 years ago, we were 18th. Last year, we were 5th, and I don't know where we're at today. I think we're close to 2nd. But so now it's 2013. I'm a guy who's nothing higher than a fire hydrant, so I don't understand buildings. But as the market starts changing the way it's changing, are you guys having difficulty finding product? Or, you know, what's the business practice today for you guys?
Well, it's fascinating because, you know, there's been a dichotomy over the last 5 years when you look at real estate. You've had interest rates that have been never lower in a lifetime, where the 10-year Treasury goes to 170, where banks don't lend a lot, where folks have tremendous amounts of trouble. I mean, in 2009 and 2010, we bought over $1.7 billion in assets and raised over $1.3 million in cash. So we had a great opportunity. And then you saw that cap rates continue to come down, and the revival comes back, so to speak. But the public markets got very hot. Real estate trusts, we're a real estate investment trust, valued very, very highly. And then all of a sudden, they tell us that the good times are coming, and they decide to raise the interest rate. And the stock market for real estate companies have really traded off 30% across the board. And so I think for real estate, it's going to be an interesting experience because, you know, you remember back in 2007, 2008, where pricing and values got turned upside down. And we look very carefully, we look very hard when we buy an asset today, because to buy an asset for a 6 cap rate, a medical office building that has to hopefully 3 or 4% same-store growth, we manage our own properties. You need to make sure that you can sustain that, because that's a very expensive acquisition compared to what it was 5 years ago. And historically, cap rates haven't been at this level, and historically, interest rates haven't been where they are today. So I think people who are looking at real estate today has to take a look and say, if the 10-year Treasury goes up another 100 basis points, this could stall out. And you could have a revaluation, because typically things go up too fast, they come down very, very quickly, and then they kind of level out. I'm not sure we're at the level out period yet, because it's just been amazing. From 170 to almost 292, 298 in a 10-year Treasury. That's got to impact cap rates, it's got to impact sellers, and buyers have to sit back and say, where's my financing for the next 7 years? What's it going to look like? And how am I raising capital today? And how do I put that out? So we're actually, I was in New York yesterday, came back last night, and I think that the real estate, the public markets, I don't know whether they're overvalued, undervalued, and I don't know if the economy is really getting that much better. I don't know.
Perfect segue. Elliott, I keep hearing, start your clock. Keep hearing about bubbles, about prices going up, that this isn't going to last, interest rates go up, we're screwed. I keep arguing that we're in Arizona, and yes, that could be an issue, but based on all the things we have, I don't believe there's a bubble. The chairman of the boards of the publicly traded home building companies don't believe there's a bubble. The Wall Street guys don't believe there's a bubble, but the newspapers do. Would you kind of address that? And then I'm going to bleed it into all the rest of you guys.
All right. You are in the best situation you've been in your lives. The economy is growing slowly. There are no imbalances in the economy that suggest there's a recession anytime in the next foreseeable future. I mean years, okay? Yes, something strange can happen. Something strange can always happen. It's a low probability event. Most likely, we will continue to grow abnormally slow for years. And that means we'll only get to 22 to 25,000 single-family units by 2015 or 16. You should be doing cartwheels. There is almost nothing you can do in single-family housing that will not work out at this point. Okay? Almost nothing. You don't have to be a great genius. You just have to actually do something. Commercial's a little farther down the road. It's probably 2016 would be my guess for commercial. You got a little wait. But anybody who says that we're in a bubble doesn't know what the hell they're talking about. For those of you who have been in the manufacturing business or retail business, what happens when you wake up one day and find yourself with huge excess inventory? What's the first thing you do? Put it on sale, right? And as the sale goes on, you have less and less, you raise prices a little, and then one day, sale's over, prices go back to where they were. That's the housing market. This is nothing but a rebound from the bottom because the sale's about over.
God, I love that guy. Okay, let's take that bubble into the apartment market. You know, you hear, oh my God, there's so many permits out there, you know, but let's talk about vacancy factors, cost of dirt, and then I also want you to address, at least for the Phoenix market, the boot. Now what that means is almost all the apartments are being built, and this is as much of, it's a statement, but it's a question, from Scottsdale Road all the way down to Ocotillo, up around the 202, out to about Val Vista. So address supply, framing costs. Kind of tell me, is there a bubble in the apartment? Are you nervous? Is there debt equity? You know, the whole thing.
No, you know, we feel we've got a very long runway as it relates to the apartment business. I mean, there's a couple of trends that are, that are helping our business and will help us for a number of years. We've got a tremendous amount of pent-up demand that's out there. If you look at household formations over this recession, there was probably, if you track what the normal rate of household formations have been, you know, we're about 3.5 million short of household formations, you know, over that recession period that we had. So, and I think I heard this from Elliott one time, that today we have the highest percentage of people in their 30s that are living at home right now.
Under 35.
In 35, and those group is within our, you know, is our prime renting age. So we've got a tremendous amount of pent-up demand that has yet to be released, and as the economy improves, that will be released. We've got demographic trends. We got if you call them Gen Ys or Millenniums or Echo Boomers. That segment of the population is now entering the rental market. So our prime rental group is 20 to 35 years old. So that we've got the bell curve that's coming and entering the market. So we feel very strongly about that. We also have, if you look at marriage and people are getting married later. People that are single are more apt to live in apartments. There's less number of people that are getting married as well. So that benefits our industry. And then we've got home ownership. I mean, as we know, home ownership used to be, used to be the American dream, but that's not the case anymore for many people. So,
Jay,
sorry,
cut him off. Cut the mic.
No, I have another question.
So, you know, we've got a tremendous amount of people that now are, as we know, that the home ownership rate went from 69% down to 64% or 65%. So most of those people have kind of moved in apartments. So we've got that trend continuing. So we feel very, very good about the market going forward, particularly as the economy improves. As far as supply, we didn't build any apartments here for about a year. In 2012, we built 1,000 units. Our absorption was about 3,500 units. This year, we're going to bring on about 2,900 units. We expect the absorption to be about 6,500 units. In 2015, that number is the number of units coming online is about 4,800 units, and we expect to have similar absorption. So, with the supply in there, I get, are we gonna be overbuilt? But if you look at the supply, when it's coming in the market and where it's being built, I feel very comfortable about where it is and the absorption expectations. Some of the concerns you asked about costs and land costs. That's one of our largest concerns right now is.
Just relax.
Well, it's costs.
It's going to be okay.
Our construction costs are up 20 to 25% over the last 18 months. So it's hard to do pro forma today. So we're putting in a 1% increase in our pro forma per month to when we think we're going to be able to buy lock in costs. So so the costs going up, and we're concerned about where that's going to be. Labor so far has not been an issue. We've been able to, our subs have been able to get the labor that they need, but there is concern about that is that's going on. As far as the boot that you're talking about, well, those properties being built where people want to live. In Scottsdale, a lot of products in the Scottsdale Road corridor, but those are kind of new infill product. There's a demand for that. You look at the people that want to move in apartments down this generation, they want to be infill. They want to be close to amenities. They want to park their car on Friday and not have to get in it until the end of the weekend. And then down in Chandler, we've got 2 projects under Chandler. That's a market that's got a tremendous amount of job growth. And Chandler hasn't built a lot of properties over the last number of years. I think in the last 9 years, there's been 3 apartment rezonings. We did all 3 of them. And, so there's a demand. Chandler was difficult to get rezonings, and then they realized they really have a shortage of housing supply, and realizing that, people want a diversity of housing type. So, that's why you're getting those locations where the boot, as you says.
So, and I don't mean to capitalize a lot of time at this point, but a really important question I think everyone in this audience who's in our industry wants to know, because everyone talks in the overviews that I give and asks about, what about all these investors, all these big companies that bought all these investor homes? What if they dump them on the market? I know what the answer is, but from your perspective, what?
We don't really have a concern with what they call the shadow market. If you look at the trends and you look at when there was all this foreclosed inventory and all these investors were buying these homes and renting them, when that market was getting stronger, our occupancies were improving. So to us, we don't have a concern in that. And if you look in the Phoenix market, about 6 to 8% of apartments are only 3 bedrooms. So we don't have a large percentage of inventory where people are going to look towards apartments versus homes to build. If you're a single person, you want to live in a 1 bedroom, you're probably not going to rent a home. So the housing, the rents, the homes that we see that are being rented, it's just churning. It's just homeowners churning. So you got people that are losing homes, they're moving into homes. We still have a percentage of people we lose to home buying, to renting homes, but it's a very small percentage. So, so we don't have a lot of concern about that shadow market.
Okay.
So we feel good.
Charley, Bubble, based on all the activity that I know is going on in D&B and the master plans, why don't you kind of describe, playing off what Elliott said, what you're experiencing right now in 2013 and the future?
Well, I'm still trying to recover from Elliott saying it's the best time of our career, because as I sit and think about it, I think he's probably right, especially since I got one of my favorite apartment buyers right here between you and me, right where we want him.
You're a handsome man.
This might be the time of our life. We should just quit while we're ahead. We're seeing, so the example I'd give you is we opened Eastmark, first big master plan to open in town for almost 10 years in June 1st, first 110 plus degree day of the year, first 100 degree day of the year. Over the weekend, we had 5,000 people coming out to look at Eastmark. Many of them qualified and very interested in buying a home. And so to tie in a couple of other thoughts I heard, redefinition of the first-time home buyer got really interesting out there because you had 20-somethings that really were the traditional first-time home buyer. You had people that were 25, 26 years old 4, 5, 6 years ago that couldn't get a home, that were there to buy. So I think the consumer side of this business is very strong in spite of the American dream being broken, Chapin.
Not completely broken.
Okay, good. It's not overheated. It's been interesting looking, we talked about permits, and I don't want to get ahead of you, Nate, but the permits are less than we expected for the year. And I think a lot of it is just people not remembering and being up to speed on what it takes to take a raw piece of land through a city in today's world with financing and all the infrastructure issues, everything else, turn it into lots and sell it. So there's some of that. There was people that were struggling with, they're ready to go in that same scenario. They're making progress. The pricing went up and they sold it anyway. So none of that land got to market when it should have. We're seeing strong, stable, steady. The next couple of years, we're not cautiously bullish anymore. We're bullish. We think the market's stable and strong, and we're delivering land as fast as we can to builders within reason. At Eastmark, they're doing really well. We're ahead of projections for the year. Dan Kelly's sitting over here. If you need to buy some land, Dan's got. He sold most of it at Verrado, the stuff we brought to market. So we got builders lined up at Verrado, Marley Park. Interest is very strong. And our business is multi-year forecast. So when we're selling lots today to builders or committing to deliver lots in a year or two, it's long-term business. We're pretty calm and pretty cautious, pretty optimistic.
Good. Okay, so let's talk about optimism. About 45 days ago, the State Land Department sends out this packet. It was unbelievable. I've never seen one mailing create so much hype in my entire career of 37 years. And it was an awesome display of the assets that the state land controls. And they were just inundated with every broker, every builder, every master developer. And so, Vanessa, here we are in 2013. To the extent you can explain the pressure that's on you and the reaction to that mailing, because it was fascinating. It was all Northeast, some Southwest, some Central, some infill. And we'll talk about infill in a little bit here because it's an important subject to a lot of people in here. But could you kind of address the reaction and what you guys are doing in 2013?
Yeah, of course, and that's great news. We have received a lot of calls, and to say it's the most significant mailing or information that you've received in the last 30 years, it's pretty phenomenal. We are seizing the opportunity. I mean, we are the biggest landowner with the best land in the Phoenix metropolitan area, and we are seeing pre-recession pricing. We really are. And Desert Ridge, we're seeing prices between $200,000 to $350,000 an acre. It's incredible. Our Board of Appeals today approved a transaction, 100 acres, a $26 million deal, $250,000 an acre. That's at Pinnacle Peak and Tatum. We took a look at our holdings in the Phoenix metro area, knowing that the market was coming back, the level of interest that we were getting, and identified priority pieces of property that had already been appraised in the previous cycle, and we made a decision. We said we're not going to bring any of this property back out that was appraised during the previous cycle. We're not going to bring that out at anything less than what it appraised for before. And you know what? It worked. So we've got people out there that are interested. The amount of phone calls we're receiving are phenomenal. It's the beginning of the fiscal year. It started July 1st, and we have already about $200 million worth of real estate deals in the pipeline. A lot of this is in Desert Ridge. We do have some in the Southeast Valley. We have an auction on October 17th at Signal Butte in Guadalupe. We're pretty confident it's going to be a competitive auction, one of the most significant that the department has seen in the last 6 years. And so I think that'll be a great indicator of what's to come. It's a great time to be at the department, and it is. It's a huge era and time of optimism. So, we're talking to a lot of people here in this room, and I think you're going to see a lot of good things in the coming year.
Okay, so kind of taking a situation that has affected every single person and their entities up here is our transportation corridors. And when I give the market overview to all the mucky mucks, whoever comes in, there's no county in the United States that has raised their sales tax for a continuous 40 years to fund freeways. And now on top of it, we have Interstate 11 west of the White Tanks that'll go from Mexico to Canada. So the obvious person I'm going to ask first is Jerry. You know, you're headquartered here, you're a trucker, trucking company. Tell me, do people talk about that like they do to me across the United States? Has that affected your business? How important is that Interstate 11 to us, commerce, and the future of Arizona?
Well, first of all, I'll give a little disclaimer. I'm one of the owners of Douglas Ranch. So with that said, you know, the north-south corridor is, you know, in horrible condition today. And, you know, if you're running from Nogales to north out of there, it's just horrible. And, you know, we've all driven to Las Vegas, what a horrible road that is. And it's been that way, you know, in 1966 it was horrible then. It's still not much better. And so it is important. It's a very important lane in transportation. And there's not a lot of buzz outside of Arizona on it, but there's obviously a lot of buzz here. And, you know, it's a great thing that we've just got to figure out how to get done. And, you know, I know there's still a lot of challenges, but from our standpoint, it would be very important to help our industry and the community.
So I've been giving speeches about the market to different entities over the last 18 months. And I do a little test, and I'll come back to these guys in a minute, and I'm interested to see what happens here. I've given it to approximately 7,000 people in the last 18 months, and I have a question, and I want you all to participate. How many of you have driven up I-17 and gone left on the 303 and driven all the way down to I-10 and seen the northern loop under construction? Raise your hand. Okay. That's about the total. If I total all the audiences I've spoken to, and if you're in the real estate business and you haven't done that, and you haven't driven Sun Valley Parkway, and you haven't gone out I-10 past the White Tanks, you are missing it, okay? I've made a career of 37 years, of which for almost 40, they'll be building and voting on freeways, and everyone here doesn't get out and drive it. And the day they open up, they'll come in my office and go, I can't believe it, there's a freeway out at 303 in Cactus. And the ground went from 80,000 an acre to $5 a foot. And I will tell you, if of the 7,000 people, 900 have done that, I'm a monkey. It is so important for you guys to figure out, you know, you got to understand growth patterns. You got to understand the effect of what these freeways are going to do. The West Valley is going to be 42% of the market. East Mark has a freeway about to dump all this traffic right in its throats. If you don't drive it, you don't look at aerials, just a little advice, get out there and do it. It'll change your business practice. It'll change you. I gave an overview with one of the very prominent office brokers who said, I said, you know, talk about 303. Oh my God, there's 7 million square feet. There's going to be office. There's going to be all kinds of manufacturing. He goes, there's not going to be, this was about a year and a half ago, there's not going to be a building there for 20 years of my life. I looked at him and said, have you driven it? No, he hadn't driven it. So get out and drive. So relative to that, only because we've worked and we have been fortunate enough to move the main hospital for Mayo. We worked with them. We did 4 of the banner hospitals. I'm going to go to you, Scott, and kind of when you look at buildings and you, because I tried to understand the business practice, I mean, do you concentrate on new growth patterns, on population growth? How do you summarize that and then look at these freeway systems that we have with all these new hospitals? Because that's one of the biggest industries we have when we look at our diverse economy is your business.
Yeah, I think I'll answer your last question. I think healthcare is the new defense in the next 15 years. The healthcare sector, the employment that's happening in healthcare is all part of the Affordable Care Act. You know, we have properties in 27 states, almost 14 million square feet. And one of the things that we find is that, you know, the healthcare systems are changing. The communities are changing. And I think that healthcare is going to be a big driver of the economy when people look and say, okay, how is an economy going? And the biggest thing that you see, and why I think it's a little bit, I enjoy the optimism, because if everything turns out the way that it is is hoping to here, then there'll be lots of people. The hospitals will be expanding, and the medical office buildings that we own are going to be far more valuable, and rents are going to go up. But I think that when we look at what we want to look at is population growth, energized healthcare system that's trying to either grow through physicians, hiring physicians, or grow through bringing physicians to a location. And then we look at the overall economics of the community. We just bought stuff in Boston. We're the largest owner of medical office buildings in the state of Arizona, with over 1.4 million square feet. And Tucson has been very tough. You talk to physicians, you talk to the healthcare systems, and folks aren't any richer. The healthcare system is struggling to find the costs in order to transition into healthcare. I just think that you have to, for us, we're finding something on campus, something that is critical to the hospital that they're going to keep open, that they're going to move healthcare physicians into, or physician assistants or nurses, and where they're going to move the service of the Affordable Care Act to. So we're very defined in our objectives, and when Mark Engstrom, our Executive Vice President of Acquisitions, when he looks nationally, that's what we look at. We have over 15 relationships with major healthcare systems. We have properties here with Banner. So healthcare is going to be a very, very important component of how communities grow and how the job base within those communities progress.
Great. Hey, Mel, so you've developed, I think, 12 or 13 business parks. You've got 37,000 acres west of the White Tanks. You've got, for those of you who don't believe me, you've got development coming down the Sun Valley Parkway on the northwest and coming up from the southwest faster than anyone in this room. You can poo-poo the West Valley, but trust me, it's going down there. Describe to me these freeway systems and how they've affected the industrial view, your view of industrial parks and where you may be going and what you're going to do.
Okay. Let me take a minute and just talk about industrial parks, the history in Arizona of industrial parks, and how industrial parks have migrated to become much like a logistics center in addition to a business park, and that segment, and also how transportation affects both historically business parks and how we think the West Valley will be affected in terms of its proximity to California. Is that okay?
That's okay.
Sure. The Eaton, a little unknown fact here, which someone will correct me on with their Google, but you'll be wrong. Over 60 years ago, Ralph Eaton came to Phoenix. I think he was a teenager, and he bought a melon field. And from that melon field, he built a building and then put another building next to it, and then put another building next to it. And then on a piece of paper, he wrote the height of the fences that could be on the around the properties, and some landscape requirements, like you couldn't have grass or you could have a tree, etc. And that was perhaps the first business park in Arizona. And that company, Eaton International, was a company that David Eaton took over that became JDM. So that's kind of a little history of the business park business in Arizona and the JDM brand. We actually partnered, Charlie knows, with Tally to do a couple of our business parks in the 80s sometime. And so as transportation, the Red Mountain Freeway in Mesa was built. We did a business park out there. Tally was actually on the corner of one of our business parks, and we ended up buying that building where they did the airbags. I don't know, Charlie, if you remember. Yep. And they had a great explosion, and a door flew 600 feet into one of our lots. So what's happened is, as industrial buildings began, they started clumping together with like kinds of uses, and then CC&Rs were written, covenants and restrictions, and they evolved into the type of product that our most recent park called the Cotton Center. And my guess is if you're a broker, that we have over 3 million square feet in Cotton Center, and the best developers in the valley are there. We have a hotel, we have retail, we've got every from Progressive to GE to Caremark to Shutterfly to Aetna's now. I mean, on and on and on is the business park of today. Ralph wouldn't recognize, because the business park today is a live, work, and convenience. I won't call it play necessarily facility. And so that's the evolution of business parks. Cotton Center we acquired because it was literally bisected within a couple miles of virtually every freeway. So business parks follow transportation, and when you look at the West Valley and you look at growth, and then you look at proximity to California, you're seeing the warehousing and the logistics centers being built in the West Valley. Why? There's 11.5-hour federal mandate in terms of trucking, isn't that right? That the turnaround needs to occur. So you go from Port of LA in Long Beach to an 11-hour drive, noting that 80% of the trucks go back to California the same day. So being in the West Valley with the logistics centers is an important thing. That's why you're seeing these millions and millions of square feet being built. So follow that in terms of transportation. Look at the growth of the valley. Assume that 1 million people in the next 10 years. Is that fair, Elliott?
That's fair.
Okay. How much land does that take? 75,000 acres, give or take? But is that fair?
Yeah.
So my question is, Gilbert, Arizona is 60 square miles, and my question is, where are the next 1 million people going to live? Where are there 75,000 acres in the next 10 years? Where is transportation? Where and how is the logistics and business parks going to develop? And the answer is certainly in the West Valley, having 37,000 acres, we look and we say, we believe that what Nate's talking about is we're seeing it begin to happen as it's wrapping the white tanks. So if you take that drive Nate talked about, and I really believe you should take the 303, go around the Sun Valley to the I-10, and that beautiful white tank regional park is a wonderful place just to hang out and see the waterfalls and recognize that that's going to be an important asset. Now I say 60 square miles, with Gilbert. Douglas Ranch is about 60 square miles. My question is, where are you going to replace the next Gilbert, Arizona? And so with that, the understanding is if about half the growth goes west, half goes east, what's going to happen? And so 15 years ago, we made a judgment that growth was going to happen in the Northwest, and being you kind of know Jerry Colangelo as a visionary and a big thinker, and that's part of our culture. We saw an opportunity, and we said, when Nate tells us it's the right time, it's time to break ground. So we believe transportation and this whole connection's happening.
So Elliott, growth patterns with these freeway systems, the lack of available ground, the constraints by public-owned land, state land. I put this map up there just for you to look at. The black's built out. All the other colors are public grounds. The only one that sells is Vanessa, and she's probably pretty happy about all this information that she's receiving. Kind of address the growth patterns, and I'm going to come back to commercial in a minute.
Well, growth patterns, as you say, have to follow the land that's available. They follow the transportation routes. Unlike the press would have you believe, there's not a lot of skip development in Phoenix, Arizona. It pulses out. Why? Because the infrastructure is too expensive to jump out. You can't do it. If you do it, you have to pay for it yourself. It's just real expensive, as Charlie will tell you.
Yeah.
But the bottom line is that if you're taking a long-term time horizon, as these two gentlemen are, it's not rocket science. In fact, it's so easy, it's ridiculous. Trouble is, you get focused on what's happening tomorrow afternoon at 3 or what happened yesterday. The home builders today are interested in how many homes they sold last month, not how many they're going to sell over the next 5 years. Their focus is in the wrong place. You as brokers have to deal with that ridiculous focus. But if you have a 5-year or 10-year time horizon, life is great. I don't know how else to put it.
So life is great unless you're a commercial developer. The freeway systems, I think, are relieving some of this as these new areas open. And kind of, Charlie, I'll look to you because you've been in the commercial market. Clearly, the internet is changing big boxes and all the shopping centers. I won't bore you because you've heard these in all these ceremonies or these situations like today. But Charlie, address the activity you have at Eastmark, the activity you have out at Verrado with these new freeways that have opened up right at the front door of yours.
So my first thought was when you're doing that drive and you take the 303 and hit the 10 and turn west, just stop at Verrado and buy a house. We've got plenty of choice right there. We've got commercial, buy lunch, play around a golf, it'll be perfect. Commercial is funny. I spent the early part of my career in it, and it really is a dogmatic business. It's very methodical, slow. It's not prone to massive overbuilding until late in the cycle when everybody, my favorite is the 100,000-foot study that Elliott produces, says there's demand for 100,000 feet, and every developer in town figures they're the only guys that are going to build that, and we end up with, John, 5-6 million feet overbuilt. So the market for commercial is improving significantly. I'll tell you, I've been chasing users for my entire career, employment use in business parks early on with JDM and Tally and on. And we're seeing more users look at Phoenix than I've ever seen in my career. And I think there's a couple of reasons for it. It's a great place to live. Nate asked how many of you are natives, and we didn't actually have the raise your hands, but it's a great place to live. And when they start looking at relocating, you got some big issues. California's broken. If you want to build a building for yourself in California, it's a 10-year process. And so it's just flat broken. And so you've got we feed a lot off of California on the employment side. But if you're looking at where you're going to locate, it's great weather. It's a great attitude state for business. It's got a lot of really solid fundamentals for almost every business you can think of, including great new infrastructure. The other thing that's happened is in the last 10 years, Nate talks about freeways and transportation, and that has been amazing, and it's great stuff. But I really believe from the state down, our economic development infrastructure is just radically different and better than it's ever been. It's really solid. Now you start at the Commerce Authority and you go all the way down, GPEC and through the cities. It really is amazing. And with the internet and information exchange, there's no secrets. I mean, companies start looking and our people are on them in this state, and it's really exciting. So I think whether it's Dick's Sporting Goods out in the West Valley or Grand Canyon University coming to Eastmark, these big employment uses and these big opportunities are really exciting, and they're better than I've ever seen. It's competitive, and yet it's really not. People look for logic, and these transportation corridors and whatnot that we have are really, really powerful. Retail, I still don't get. I'll defer to somebody smarter than me on retail. I don't believe that the internet is going to eliminate shopping. And I don't believe anybody cooks at home anymore. You go to restaurants in this town, and they're always busy. They're always adding restaurants. And so I think there's just refinements and adjustments that need to happen in the retail and mixed use. So I don't know if that's hitting close to what you're looking for.
Well, I mean, I don't know if we're allowed to talk about the users that have appeared out at Eastmark due to the freeway opening up.
Yeah.
It's caused, are we allowed to talk about it or not?
Well, no. Let me just hit on Eastmark real quick. So the Williams Air Force Base closed and sat vacant for 20 years, and a huge sucking sound economically. The region got together, created Gateway Airport. When we were zoning Eastmark in 2006 and 7, there were no commercial flights coming and going out of Eastmark. Compare and contrast to 2012, they did 1.2 to 1.3 million trips for travelers. If you compare that to what I was watching in 1983, we used to go to Orange County and watch John Wayne Airport, and I don't know, I'm going to sound old here, but you used to walk up and get your ticket, go upstairs to a room about the size of a bedroom, and get a hot dog and a beer while you waited for your flight, and then you walk across the tarmac and get on an airplane. John Wayne's now, I don't know what they're doing, but it's more than the 1.3 million that Gateway's doing. But I think if you compare those two and we fast forward out 10 years, it's going to be very similar, and it's startling what that kind of infrastructure does to growth. You can be to work from Southern California to Mesa faster than you can be from your home to your office in Southern California. And so it's an amazing thing going on around that airport. So I get all fired up about that. When First Solar, if they hadn't fallen on hard times in the solar industry, they came in, they went from nothing to a 1.3 million square foot building, complete, ready to occupy in 13 months. Combination of, again, our infrastructure for economic development and the city and the process to get people in. And that doesn't happen in most places in the country. Denver, the places we compete with, Denver, Salt Lake, El Paso, Dallas, Fort Worth, anywhere in California, they can't move like that. So I really do believe the infrastructure's in place, and you're going to see amazing growth. And not just to plug Eastmark. We're looking at a lot of business at Eastmark, and the freeway dumps it there, so it's very exciting. We're optimistic that we'll see that in the West Valley as well at Verrado, and there's already a lot of people a little bit closer in doing great out there. I'm looking at Heidi and her crew, and so it's an exciting time. I think Elliott's right with maybe the best time we've seen.
So Vanessa, relative to the commercial state lands, historically it's been you lease the commercial, you sell single family and multifamily. Is that still the case, and are you seeing any demand for the commercial properties from the State Land Department?
Sure. I think that remains our preference to lease for commercial and sell for residential. It's not a bright line rule. There are always exceptions. Last year we had 2 commercial deals that we sold, both just on Scottsdale Road on the east side and on the west side, just south of the 101. And there were reasons on each one that we made the decision to sell. Specifically, they were huge returns to the trust, and the applicant would have gone elsewhere had we not made that decision. So if the reasoning is sound and we can justify it, then we will. But we would prefer at some point to remain the landlord and receive the rental stream that goes directly to the beneficiaries. So in addition to the 2 that we had last year, we have some others that we're looking at. One of the bigger ones that's been in the papers and has been of great interest, I'm sure to a lot of you in the room, and certainly to us, it's very exciting, is the application around the Mayo Clinic in Phoenix. That's all on state trust land, and part of that is for a purchase for some commercial uses to facilitate the development of the biomedical corridor. We're also looking at a potential application in Crossroads, which is our big holding in Scottsdale right off the 101, which would also be a commercial use, but that one's still in the development phase. So it's a very specific conversation depending on what the use is and what the need is to have ownership of the property.
Thank you. Okay, so I'm going to get to infill because it's really important. It's the hottest thing. We just listed 32nd Indian School, the southwest corner. We were supposed to have the package done Monday. The signs went up last Saturday, and it is overwhelming what's going on here. So before we actually, let's just get into that. I was talking with Jerry prior to this, and he said, let's kind of talk about Park Central. There was an article about that, kind of talking about it. Again, I'm not very good if it's higher than a fire hydrant unless you're going to knock it down. So Jerry, kind of why don't you address the point that you wanted to hit with me on that?
Well, Park Central's been very interesting. We've owned it for a long time. It was a good project, and it cash flowed and everything. And when things slowed down, and I'm sure all of you in the real estate can recognize these issues, 3 things kind of started happening. Number one, our partnership with David and I got a little sour, and we were focused on going different directions. The market was horrible, and we had a lender that wasn't very cooperative. And so those three things have kind of got it to where it is today. David passed away, as a lot of you know, here a little while ago, and we have just made the deal literally today, and hopefully it's funded today, if not in the morning, where we have bought his estate out. So we're gonna be in control of it. We'll own 100% of it. It's kind of like putting Humpty Dumpty back together again. It's still got a few problems. The financial firm that foreclosed on it, to David's credit, they've got the buildings, but he did not give them the parking around it. So they've got a little minor wrinkle, and so they might be a little easier to negotiate. But they want to be part of the solution and not part of the problem when we talk to them. So I think if we get the estate, which hopefully got done today, there's a couple more pieces to put Humpty Dumpty back together again. But I think it's going to be a great project, and we've had numerous people call us wanting to know what's going on, and so I think we got to first base today, and hopefully something will happen out there. But it's it's a great project, and very centrally located. Cities, I think it's going to be very cooperative to do kind of whatever we want to do.
Okay, and you're also seeing a lot of redos of some of the larger pieces in town. You're seeing rebirth of infill projects. And just as Scott, when you look at your buildings, and I don't know where your portfolio is, I didn't have time to dig into that because I was trying to find you. But explain to me kind of where you.
That's what I like.
You guys, you are really good. Just for the record, you guys are really good. Could you kind of fill us in? Are you an infill guy? Are you, however the deal works, and where the hospital is and demographics? Kind of explain to me your criteria, I guess, is what it is.
Well, we are national, and what we're looking for is, again, the healthcare. I can't emphasize the fact that the healthcare systems in this country are changing, and it's changing like it's never changed before. There's been a complete legislative change in healthcare, and that's going to impact the healthcare systems. It impacts how they use their real estate. It impacts whether they can afford their own buildings. Traditionally, they've owned, and so we're looking at. When we buy something, we want to buy, if we go into a geographic location, we want to spend $100 million. And for example, in Sun City, we own all 16 buildings on both the two campuses there. Tucson, we own 3 buildings around one of the hospitals there. In Albany, we own, we're the largest owner of MOBs in the state of in New York, but they're all in Albany. So we like concentrations. And when you say infill, I say if I buy one, I want to buy two or three more. And so we're just not a buyer of one-offs. We want concentration. We want the healthcare system or the hospital system that's the dominant provider of patient care in that location. And then we look at the states. I mean, we've talked here about Arizona, but when we look at our capital, we've got over $1 billion to spend. We're less than 30% leveraged. So when we look at the states, we look at what's the business-friendly state. Where are we as an owner going to get a relationship with the healthcare system, relationship with the local business folks? Is the state looking to say, we care about invested capital? And I think Arizona's got a long way to go for that. I think one of the things that Arizona does not do a very good job of is attract capital nationally. 4 companies have gone public here, real estate companies, in the last year. And that's about $20 billion of equity that is headquartered in Scottsdale. But you don't hear about that. You don't hear about the trying to generate a wherewithal, because if you do, then other businesses will follow. Good-paying businesses, not call centers for $30,000, $40,000, $50,000 a year jobs. They're not going to buy $300,000 houses. You need intellectual talent. And I think that's the biggest challenge Arizona has in order to fulfill these desires to build these communities and expand opportunities is you got to attract businesses, but it's not the call centers. It's the entrepreneurial businesses that employ 15, 20, 100 people, pay them extremely well because of intellectual talent that they bring, and then they start businesses. When I hire people, I look at them and say, you know what, 10 years from now you want my job. 15 years from now you want to be able to duplicate a $4 or $5 billion company. And I think that that's part of what the infrastructure in Arizona, as it changes. You've got the old guard, you got a new guard. People under 40, everybody raise their hands. In order for Phoenix to be relevant, because we're out there, we're talking to the major banks, we're talking to the investment bankers, we bring Cohen & Steers and Fidelity and the large pension funds to look at our properties here. You got to want to invest. And if you want to invest, you need that energy that comes from that. And that's the exciting thing. If we can get that, then Arizona will be successful, Phoenix will be successful, and it'll grow.
Thank you. Elliott had to go close the deal. No, he has to catch a plane. So thank you, Elliott, for coming. I appreciate it. So we're going to go about 5 more minutes. I'm going to wrap this up. Vanessa, you get the last question of the evening. But I want to ask you a question now. I'm going to come right down the line to me. And Scott kind of hit on it. Vanessa, what do you see as, I've been Mr. Happy, everyone's Mr. Happy. What's the reality? What is it that could affect us, that bad could happen, that could stop the things that you see, if you have an opinion?
Well, I think that it's my best interest to remain Mrs. Happy up here. So if I want to generate, more people filing applications, it's to keep that optimism going. So
okay.
I'm not about to, put a needle in. Yeah, that's exactly. That's why we're passing notes back and forth up here. So I was asking him to please keep his comments, tempered. But actually, that was kind of what was happening. But anyway, I think from our perspective, from a land department perspective, it's the cost of infrastructure. Currently in the city of Phoenix, we're dealing with an infrastructure limit line up along the I-17 at the 74 and I-17, which means it's all developer-funded infrastructure west of I-17, which is going to be a significant impediment to the land department putting land up to auction up in that area. And we've had a lot of interest from companies from all over the United States looking to locate in the greater Phoenix area. So I would say that, and then from a more local level at the land department, it's from what we can do in our interaction with the community, it's department resources. I mean, that's what we face, and with getting our budget from the legislature and appropriated funds and a very finite amount of money, it makes it hard to capitalize as much as we should on the opportunities that are out there.
Thank you very much. Mel, what do you see as something could derail us or as a problem, our biggest problem that we need to correct?
I think that our single biggest obstacle is not understanding how well we've done. I think that Arizona, you just think about it, is we're 101 years old. I mean, George Burns lived to be 100. So we are a relatively new state, and we have done amazing. And we spent a lot of time criticizing what we've done in Arizona. And I believe that the greatest obstacle is our own negativity. And I believe strongly that we need to appreciate this state, the governance that we have, the ease of doing business comparatively, and to not change that, and to be absolutely resolute that we stay and continue to become what Arizona has been. And I do believe that if we fail to do that, that's an obstacle. I think also it's important to realize that a couple of the obstacles that we have that take us from being a non-gateway city, understand, Arizona's, Phoenix is not a gateway city, and we're competing with gateway cities, and we're always looked at as, well, you are not New York, San Francisco, LA, we get it, we're not Seattle. But what we are is we understand that our growth continues even without what I'm about to say being in place. And that is, we are not a financial money center. Now, I want you to imagine for a minute that if Phoenix became a money center, what would happen to the growth and the explosiveness because of what we all know about our land, our weather, our business climate, is not only would we continue to grow geometrically, but we would be Texas has oil, we don't. But we have everything Texas has and more. And add that capital formation side, and I can tell you that there are a few people in the valley that are committed, working on ways to some strategies to create some opportunity to become more of a capital financial center. And if that does happen, and I think that in the next 10 years, people are going to wake up and go, wow, look at all the banks and look at all the commitment from financial companies that are now here. And it's amazing if you just Google financial regionals, the number of regionals. Now, if we can get the financial centers that are in New York and San Francisco and globally to see Phoenix as more than just a hub of the Southwest, which I believe we will do, that together with the attitude of believing in Arizona, appreciating where we've come, knowing what we have, and then looking to the future in terms of what we will get, and we will get more and more respect. I think Arizona, I know it's supposed to be what are our obstacles. I think the question is, what are our opportunities? And that is to continue to stay the course, but understand that we have something that is absolutely unique and strong and lasting. And I believe that.
Great, thanks. Okay, Jerry, what's our obstacle besides the cost of gas?
Well, first of all, I'm a very optimistic person, and everybody else is up here, but I also will take the other side of the view. And a lot of people come to me and say, Jerry, you see this economy better than anyone. And we do. I mean, we're on the front side. I can tell you the economy is very, very soft. They revised GDP the other day to 2.7, and I don't know what they're smoking back here in Washington, but the GDP was not 2.7 in second quarter. And, we deal with a lot of the big companies, and so if there's what's the word you're saying, a challenge is the economy. And as long as we've got, the policies that are coming out of Washington, it's just, that would be the detriment to it. Yeah. Just one thing, the West Valley out there, a lot of big warehouses have come in out there. TJ Maxx, Amazon took three or four big buildings. Winco's building an old piece of property we sold. And one of the big issues is that they can distribute out of Phoenix overnight into LA cheaper than they can literally distribute within LA itself. And so that's what's really driving a lot of that. And I think that's going to continue. And Dick's, a couple other things that's in the rumors that's going on out there too. So, right. But we got to get this economy purring a little better than we are.
Charlie?
So I'm a raging optimist, and I agree with all the comments on maintaining optimism. I've always been very moderate, and I'm concerned. I get more concerned every day with this irrational party politics where we've just got polar division and stalemate. I think it's bad for the country. I think it's bad for it trickles all the way down. I think it's bad for our state when we get into it. And I was reflecting, my wife Kathy and I drove down here together, and we were thinking back went through the presidents from Reagan to Bush 1 to Clinton to Bush 2, and it's from leadership down. They were deal makers. I didn't agree with all their policies. I voted for almost every one of them that in there. And yet they were deal makers. They got Congress focused. They knew what was healthy and moved forward. And I'm really disgusted by most of the behavior of this extreme stay in the corner and not compromise behavior. And I think in Arizona we need to vote them out. So that's my concern is irrational behavior by politicians.
Okay, Chapin, before you go, don't forget to take your national health care bags. What? I'm sorry? And cigars? Oh, then you'll have to go to the hospital after you get your cigar.
Nate, is Patty Graham here?
Is who?
We're supposed to wish Patty Graham happy birthday back there. One of our legendary title people.
Happy birthday, Patty.
Happy birthday, Patty.
Okay, so after this, I have one question for Vanessa, and then I can open up for questions, or you guys can adjourn. And before, I want to thank the panel. You guys are awesome. Scott, it was nice to get to know you a little bit better. Thanks for being a good sport. You guys, you rock. So Chapin, go ahead. Tell us what you see as a problem, and then I'm going to end it with Vanessa.
Well, I agree with the panel. I mean, I think the biggest, if we continue on the same trajectory as we are as it relates to our political environment, I think we've got a lot of support. We've got, Arizona's a great place to be. So, I look at the obstacles more on the economic side. I mean, if we continue, if the economy slows down, that's going to have a huge impact on what we do and what happens to this state. So, again, I echo everything that they say. And I think another thing that's important that we're seeing that's helping this city as well is our universities. And I think it's continuing to support what's going on with ASU. And you look at the growth that institution has done for this city is tremendous. I mean, I'm a U of A guy, so I hate saying this, but I mean, you look at the growth that's happened downtown. You look at the biotech that's is coming in this, the industries that it's creating, the jobs that it's bringing. And the companies will come to this town because they feel confident and they can get qualified employees. So I think, if that growth with ASU continues, that's another driver that's going to really help this community.
Great, thanks. Okay, so 2 years ago, I asked the panel, Jerry Calanger was on it, and I said, you're on a deserted island, you get one of these three people, Jeannie, Marianne, or Ginger, okay? Jack Razor said all three.
Of course he did.
My office said, don't do that again. But you can ask Vanessa, if you were going to get deserted on an island, Brad Pitt, Bradley Cooper, or Justin Timberlake?
Oh, okay. Do I really have to answer this question?
Well, it's up to you.
Okay, and can I choose Jack's answer? Can I say all three?
I'm so proud of you.
Thank you. I'll go with all three.
Anyways,
Right.
thank you all. Thank you, panel. Thank you, sponsors. You were great. Have a good night.